Part 2. Data Accounting and Financial Management. In this video we will study about Chapter 5, Creating and Managing Ledgers and Accounts. Chapter 6, Recording Financial Transactions, Invoices, Payments, Receipts. Chapter 7, Managing Cash and Bank Transactions. Chapter 8, Understanding and Using Accounting Ratios and Reports. Creating and Managing Ledgers and Accounts in Tally. ERP 9. Welcome to our tutorial on creating and managing ledgers and accounts in Tally. ERP 9. Whether you're a business owner, accountant, or just someone interested in mastering Tally, this video is for you. Let's dive right in. Introduction to Ledgers and Accounts. Before we begin, let's understand what ledgers and accounts are. In Tally, a ledger is a book or collection of accounts in which account transactions are recorded. It's crucial for tracking the financial transactions of your business. Creating a company in Tally. Narrator. First, let's create a company in Tally. Open Tally. ERP 9 and follow these steps. 1. Go to Gateway of Tally GT, Create Company. 2. Fill in the company details such as name, address, and financial year. 3. Save the company details. Now, we have our company set up and ready to create ledgers. Creating ledgers. Narrator. To create a ledger. 1. Go to Gateway of Tally GT, Accounts Info GT, Ledgers. 2. Enter the name of the ledger, for example, Sales Account. 3. Select the appropriate group, such as Sales Accounts under the primary group. 4. Fill in additional details if needed and save. Repeat these steps to create other necessary ledgers like Purchase Account, Cash Account, Bank Account, etc. Managing Ledgers. Narrator. Managing ledgers involves editing, displaying, and deleting ledgers. Here's how you can do it. 1. Editing ledgers. Go to Gateway of Tally GT, Accounts Info GT, Ledgers GT, Alter. Select the ledger you want to edit, make the necessary changes, and save. 2. Displaying ledgers. Go to Gateway of Tally GT, Accounts Info GT, Ledgers GT, Display. Choose the ledger you wish to view. 3. Deleting ledgers. Go to Gateway of Tally GT, Accounts Info GT, Ledgers GT, Alter. Select the ledger and use the Delete button to remove it. Grouping of ledgers. Narrator. Grouping ledgers is important for better financial management. To group ledgers. 1. Go to Gateway of Tally GT, Accounts Info GT, Groups GT, Create. 2. Enter the group name and specify whether it's a primary group or a subgroup. 3. Assign the necessary ledgers to this group. This helps in organizing your financial data more effectively. Practical example. Narrator. Let's create a practical example. Suppose we want to record a sales transaction. We'll create a sales ledger, a customer ledger, and record a sales entry. 1. Create a sales ledger under Sales Accounts. 2. Create a customer ledger under Sundry Debtors. 3. Record a sales entry by going to Gateway of Tally GT, Accounting Vouchers GT, F8, Sales. Fill in the details and save the entry. Tips and Best Practices. Narrator. Here are some tips and best practices. 1. Regularly update your ledgers to reflect accurate financial data. 2. Use appropriate groups for better organization. 3. Back up your data to prevent loss of information. Following these practices will help you maintain an efficient accounting system in Tally. Narrator. That wraps up our tutorial on creating and managing ledgers and accounts in Tally. ERP 9. We hope this video is Chapter 6, Recording Financial Transactions. Hello and welcome to our comprehensive guide on recording financial transactions in Tally. In this video, we'll walk you through the process of recording invoices, payments, and receipts using Tally. You'll be well equipped to manage your financial transactions efficiently. Let's get started. Chapter 6, Recording Financial Transactions. Welcome to Chapter 6, Recording Financial Transactions in Tally. In this session, we will learn how to record various financial transactions such as invoices, payments, and receipts using Tally. Brief overview of what will be covered. O. Creating and recording invoices. O. Processing payments. O. Recording receipts. Setting up ledgers. Presenter, before we start recording transactions, we need to set up the necessary ledgers. Demonstrate creating a sales ledger. 1. Go to Gateway of Tally GT, Accounts Info GT, Ledgers GT, Create. 2. Enter the name Sales. 3. Select Sales Accounts under Group. 4. Save the ledger. Repeat the process to create a purchase ledger under Purchase Accounts, creating and recording invoices. Presenter, now let's create and record a sales invoice. Step-by-step guide. 1. Go to Gateway of Tally GT, Accounting Vouchers. 2. Select F8, Sales. 3. Fill in the date field. 4. In the Party AC name field, select or create the customer ledger. 5. Enter the details of the items/services sold. 6. Specify the quantity and rate. 7. Ensure the total amount is correct. 8. Save the voucher. Demonstrate recording a purchase invoice following similar steps but selecting F9, Purchase. Recording payments. Presenter, next, we will record a payment transaction. Step-by-step guide. 1. Go to Gateway of Tally GT, Accounting Vouchers. 2. Payment. 3. Fill in the date field. 4. In the account field, select the bank or cash ledger. 5. Enter the details of the payment, including the amount. 6. In the particulars field, select the ledger account to which the payment is made. 7. Save the voucher. Mention the importance of recording payments to manage cash flow effectively. Recording receipts. Presenter, now, let's look at recording receipts. Step-by-step guide. 1. Go to Gateway of Tally GT, Accounting Vouchers. 2. Select F6, Receipt. 3. Fill in the date field. 4. In the account field, select the bank or cash ledger where the receipt is deposited. 5. Enter the details of the receipt, including the amount. 6. In the particulars field, select the ledger account from which the receipt is received. 7. Save the voucher. Explain how receipts impact the company's cash inflow and the importance of timely recording. Practical examples and common scenarios. Presenter, let's go through some practical examples and common scenarios. Example 1, recording a partial payment against an invoice. O. Demonstrate how to apply partial payment to an outstanding invoice. Example 2, recording an advance receipt from a customer. O. Show how to record and adjust advance receipts. Example 3, handling multiple payments for a single purchase. O. Demonstrate the process of recording multiple payments and applying them to a single purchase ledger. Conclusion and QIMP. A. Presenter, in conclusion, today we learned how to record various financial transactions in Tally, including creating invoices, processing payments, and recording receipts. These steps are crucial for maintaining accurate financial records. Open the floor for questions. Provide answers and clarify any doubts. Thank you for joining this session on recording financial transactions in Tally. Practice these steps regularly to master the process. Chapter 7, Managing Cash and Bank Transactions. Hello and welcome to our comprehensive guide on managing cash and bank transactions in Tally. In today's session, we'll cover everything you need to know about handling your business's financial transactions using Tally ERP9. Whether you're a beginner or looking to refine your skills, this video will provide valuable insights and practical tips. Let's dive in. Overview of cash and bank transactions. Before we get into the details, let's briefly discuss what cash and bank transactions are and why they are crucial for your business. Cash transactions involve any dealings made in cash, while bank transactions include all dealings through your bank account. Accurate management of these transactions is vital for maintaining your financial health and ensuring smooth operations. Creating and managing ledger accounts. First, let's set up our ledger accounts for cash and bank transactions. Follow these steps. 1. Creating a cash ledger. O. Go to Accounts Info GT, Ledgers GT, Create. O. Name the ledger as Cash. O. Under Group, select Cash in Hand. O. Save the ledger. 2. Creating a bank ledger. O go to Accounts Info GT, Ledgers GT, Create. O name the ledger as bank account. O under Group, select Bank Accounts. O enter bank details like account number and IFSC code. O save the ledger. Recording cash transactions. Now that our ledgers are set up, let's record some cash transactions. 1. Cash receipts. O go to Accounting Vouchers. O select Receipt Voucher, F6. O enter details such as date, amount, and party name. O select the cash ledger and the corresponding sales or income ledger. O save the transaction. 2. Cash payments. O go to Accounting Vouchers. O select Payment Voucher, F5. O enter details such as date, amount, and party name. O select the cash ledger and the corresponding expense ledger. O save the transaction, recording bank transactions. Next, let's record bank transactions. 1. Bank receipts. O go to Accounting Vouchers. O select Receipt Voucher, F6. O enter details such as date, amount, and party name. O select the bank account ledger and the corresponding sales or income ledger. O enter the check number and bank details. O save the transaction. 2. Bank payments. O go to Accounting Vouchers. O select Payment Voucher, F5. O enter details such as date, amount, and party name. O select the bank account ledger and the corresponding expense ledger. O enter the check number and bank details. O save the transaction. 3. Bank reconciliation. O go to Banking GT, the bank account. O compare the bank statement with the transactions recorded in Tally. O mark the transactions as reconciled. O save the reconciliation. Viewing and analyzing reports. After recording transactions, it's essential to view and analyze reports to understand your financial status. 1. Cash book. O go to Display GT, Daybook. O filter by cash ledger to view all cash transactions. 2. Bank book. O go to Display GT, Daybook. O filter by bank account ledger to view all bank transactions. 3. Bank reconciliation statement. O go to Display GT, Banking GT, Bank reconciliation. O select the bank account to view the reconciliation statement. That's it for today's session on managing cash and bank transactions in Tally. We've covered the creation and management of ledger accounts, recording various transactions, and viewing essential reports. Mastering these skills will help you maintain accurate financial records and make informed business decisions. So we will see you in next video. Welcome to Chapter 8, where we delve into the intricacies of accounting ratios and reports within Tally, a comprehensive accounting software. This chapter will guide you through the essential concepts of accounting ratios, their significance, and how to generate and interpret various reports in Tally for effective business decision-making. Overview of accounting ratios. 1.1 Definition and importance. Accounting ratios are quantitative tools that help stakeholders evaluate the financial performance and condition of a business. These ratios provide insights into various aspects such as liquidity, profitability, efficiency, and solvency. Understanding these ratios enables businesses to make informed decisions, ensuring sustainable growth and stability. 1.2 Types of accounting ratios. Liquidity ratios. O current ratio measures the ability of a company to meet short-term obligations with its current assets. Formula: current assets, current liabilities. O quick ratio assesses a company's capability to meet short-term liabilities with its most liquid assets. Formula: current assets, inventory, current liabilities. Profitability ratios. O gross profit margin indicates the percentage of revenue that exceeds the cost of goods sold. Formula: gross profit, revenue, x 100. O net profit margin reflects the percentage of net income generated from total revenue. Formula: net profit, revenue, x 100. O return on equity, ROE, measures the return generated on shareholders' equity. Formula: net income, shareholders' equity, x 100. Efficiency ratios. O. Inventory turnover ratio indicates how many times a company's inventory is sold and replaced over a period. Formula: cost of goods sold, average inventory. O. Accounts receivable turnover ratio measures how effectively a company collects its receivables. Formula: net credit sales, average accounts receivable. Solvency ratios. O. Debt to equity ratio indicates the proportion of debt financing relative to shareholders' equity. Formula: total debt, shareholders' equity. O. Interest coverage ratio measures a company's ability to pay interest on its outstanding debt. Formula: earnings before interest and taxes, EBIT interest expense. Generating and interpreting reports in Tally. 2.1 Introduction to Tally Reports. Tally offers a wide range of reports that help businesses analyze their financial data comprehensively. These reports are categorized into financial statements, inventory reports, and statutory reports, among others. 2.2 Financial statements. Balance sheet. O. Generating balance sheet. Navigate to Gateway of Tally GT, display GT, balance sheet. Customize the period for which you want to view the balance sheet. O. Interpreting balance sheet. Assets and liabilities, analyze the composition of current and non-current assets and liabilities. Equity, evaluate the shareholders' equity to understand the net worth of the company. Profit and loss account. O. Generating profit and loss account. Navigate to Gateway of Tally GT, display GT, profit AM, loss AC. Customize the period for detailed analysis. O. Interpreting profit and loss account. Revenue and expenses, examine the revenue streams and expense categories to assess profitability. Net profit, determine the overall for all expenses. 2.3 Inventory reports. Stock summary. O. Generating stock summary. Navigate to Gateway of Tally GT, display GT, inventory books GT, stock summary. Select the period and inventory items for analysis. O. Interpreting stock summary. Inventory levels, evaluate the stock levels to ensure optimal inventory management. Stock valuation, analyze the value of inventory on hand for financial reporting. 2.4 Statutory reports. GST reports. O. Generating GST reports. Navigate to Gateway of Tally GT, display GT, statutory reports GT, GST reports. Select the specific GST report required, for example, GSTR1, GSTR3B. O. Interpreting GST reports. Tax liability, assess the GST liability for the period. Compliance, ensure compliance with GST regulations by verifying the accuracy of GST returns. Practical examples and case studies. 3.1 Case Study 1, Liquidity Analysis for XYZ Limited. Scenario: XYZ Limited wants to assess its liquidity position for the last financial year. Steps in Tally. O. Generate the balance sheet for the financial year. O. Calculate the current ratio and quick ratio using the balance sheet data analysis. O. Compare the ratios against industry recommendations for improving liquidity based on the analysis. 3.2 Case Study 2, Profitability Assessment for ABC Corporation. Scenario: ABC Corporation seeks to evaluate its profitability over the last quarter. Steps in Tally. O. Generate the profit and loss account for the last quarter. O. Calculate the gross profit margin and net profit margin. Analysis. O. Analyze the profit margins and identify areas for cost reduction. O. Recommend strategies to enhance revenue and profitability. Conclusion. Understanding and using accounting ratios and reports in Tally is crucial for effective financial management. By leveraging these tools, businesses can gain valuable insights into their financial health, make informed decisions, and ensure regulatory compliance. This chapter has provided a comprehensive guide to generating and interpreting various reports in Tally, empowering you to utilize this powerful software to its full potential. Thank you for joining us in Chapter 8.